Hi guys, welcome to another video from Little Too Simple. A lot of us think that only the super rich invest in hedge funds. Until recently, even we thought the same. But to our surprise, we recently found out that investments from the super rich only account for a small percentage of assets under management for most hedge funds. In fact, the majority of their investments do not come from the super rich. This raises an obvious question: who else invests in hedge funds if not the super rich? Well, watch this video to find out. If you find these kinds of videos interesting, please explore our channel for many more videos on personal finance, financial success stories, and business case studies. Now, let's roll. If you are wondering why anyone would invest in hedge funds in the first place, you can check out our detailed video on that topic by clicking the link in the top right corner of your screen. When it comes to investing huge sums of money in a manner that is not entirely correlated to broader economic and market conditions, hedge funds are one of the best and most preferred options. Even though the super rich get the most attention whenever there is a discussion about hedge funds, and mostly for bad reasons, there are many institutions and organizations that need to invest huge sums of money in a non-correlated way. And surprisingly, most of these institutions and organizations manage money for everyday people like us. So in reality, most of the money invested in hedge funds actually comes from everyday people and not just the super rich. The very reason people invest money in pension funds is to get a regular income when they retire. But pension funds cannot provide this regular income unless they themselves invest their pool of money in a way that generates decent returns and is not fully dependent on broader economic and market conditions. Since this can be accomplished primarily through hedge funds and alternative investments, pension funds allocate a good chunk of their money into hedge funds. This is also why pension funds are badly affected when hedge funds perform poorly or are targeted, like in the case of the recent GameStop saga. Institutions such as hospitals, universities, welfare organizations, and trusts often receive huge sums of money in the form of endowments. Most of the time, these organizations are obligated to invest those funds, and when endowment accounts grow beyond a certain size, it becomes very difficult to invest in regular investment vehicles. That's when they turn to hedge funds. Endowments face the same challenges as pension funds. They need to ensure long-term financial stability and access to funds independent of market conditions. Hedge funds fit this requirement well. Insurance companies are legally obligated to maintain certain cash reserves to settle claims. Depending on the size of the company, these reserves can sometimes amount to billions of dollars. While they need to keep a portion liquid, they can and do invest part of these reserves. And most of the time, given the huge sums involved, they prefer hedge funds because of their relatively low volatility, stability, and appropriate return profiles. Yes, you heard it right, labor unions too. Depending on their size, some labor unions can end up with substantial cash reserves. These funds come from membership fees, contributions, and donations. Since labor unions need to keep these funds accessible and resilient to market swings, so they can be used for labor welfare activities, hedge funds are often a preferred option. This one is the most obvious. Sovereign wealth funds, which are state-owned, can sometimes hold assets worth hundreds of billions of dollars. The main purpose of these funds is to stabilize a country's economy through diversification. Hedge funds are among the best options available because they specialize in diversified, market-independent investment strategies. And since sovereign wealth funds are state-owned, the money in them essentially belongs to the people. So in that sense, it's our money being invested in hedge funds, not just the money of the super rich. As you might have understood by now, most of the money invested through hedge funds doesn't come from the super rich. Instead, it comes from institutions and organizations that manage everyday people's money. So, please think twice the next time someone says hedge funds should be hated or targeted just because they supposedly only serve the super rich. Thanks for watching. If you made it this far, we really appreciate it. See you again in the next video.